Hello, everyone. Welcome to my class in Accounting 2 or Accountancy, Business and Management 2. We have a new topic today, which is entitled The Principles and Purposes of Taxation. Okay? Don't be stressed. Just relax and take down notes because I will try to explain the topic in a very simple manner. Okay? Number one, the number one slide is I think it's a game. Okay, I have presented here a crossword puzzle wherein we need to answer the, the, the following items, the across and the downward items. Okay, but for you to be able to answer this crossword puzzle, let me discuss something. Okay, taxation is the process by which the government is collecting money to to the people, collecting money from the people, the money which we call tax. Okay, and then this is used to defray government expenses for education, for social welfare, for health, for infrastructure projects. Okay, then this is used this is was this is being undertaken or led by the BIR, or Bureau of Internal Revenue, under the Department of Finance. They are the lead agency handling the taxation of the government. Then we have the National Internal Revenue Code of 1997, which is the basis for our tax code. Okay, but just recently, on December 2017, our President Rodrigo Duterte signed into law the train law. What does the train law means? It is train means I think that is tax reform for inclusion. No, no, tax reform for acceleration and inclusion law, otherwise known as the Republic Act 10963. Okay, we will be discussing in detail the features of the trade law. Then we also have to understand that there are people who are required to pay income taxes. Not everybody pays taxes, but there are some people or some groups who pay taxes, which we call number one, there are individuals who pay taxes like resident citizens receiving income from sources within the Philippines and outside the Philippines. Okay? So then there are also non-resident citizens receiving income from sources within the Philippines. So next, we have also aliens, whether resident or not, but receiving income from sources in the Philippines. So the very thing that we have to understand here is if they receive income inside the Philippines. But for resident citizens, for Filipinos, resident citizens, citizens inside the Philippines, if you receive income in the Philippines and outside the Philippines, that is also taxable. Okay? You need also to pay or to file for income tax returns. But there is an exemption to that. I think the OFWs, the overseas Filipino workers, are tax exempt. Okay, so that the OFWs are earning income outside the Philippines, but they don't have to pay their taxes. Okay, because they are also serving the government through their government remittances, through their remittances to their families, and that is a big source of income to the Philippines finance department. Okay, so but there are also non-individuals who are also required to pay or to file income tax returns. These are the corporations, domestic corporations, foreign corporations, estates, and trusts. But we will not be focusing on this. Our study will focus on individuals who pay or who are required to file income tax returns. Okay, so also we have to study the every citizen or taxpayer is required to file for a TIN number or tax identification number. that is a unique number to every taxpayer, so that when you go to the BIR for any transaction, you just present your TIN number for facilitation. Okay, then we also have the withholding tax. The employers help the government in collecting taxes by withholding a portion of the compensation of the employees and setting it aside, and they themselves, the employers, would pay it to the government for the withholding tax of his employees. Then we also have the what else? The passive income. What is a passive income? A passive income is a form of an income from other sources which you do not have to actively work for it. An example of that is PCSO winnings, savings from deposits, or time deposits. Okay, you earn income from these activities, but you don't have to exert, you don't have to be working for it every day. Okay, this is different from your compensation income, wherein you report to office for work and you earn compensation income. But in a passive income, you don't have to actively work for it, but at the same time you are earning income, or you derive income from that. Okay, from the PCSO winnings, from the time deposits, from the savings deposits that you put in the bank. Okay, then what else? We also have the primary purpose of, already we have discussed it, that to raise revenue for the government expenditures like education, health, infrastructure, social health, and what else? Okay, so now let's look at the problem. Okay, the problem here is number one, process by the state to levy people and business for tax purpose. I'll just give a clue. It starts with letter T. Number two, tax is paid normally by giving blank to the government. It starts with M. Then number three, the lead agency in tax collection in the Philippines is called blank. No need for a clue. The BIR form used to apply tax payment is called blank. You just need to give me the acronym, okay? No need to give the entire name. An acronym, it's a three-letter acronym. Then downward, every taxpayer registers to the BIR using only one set of numbers, okay? For your entire life, you will only be given one set of numbers, which you call blank. Number six, it is called the Republic Act 10963, signed by President Rodrigo Duterte. Okay. Then number seven, employers deduct employees' compensation for tax purpose. What do you call that? It's, it starts with W. And number eight, income earned without actively working for it, like winnings in PCSO. It starts with P. Okay. So now let's answer this. Okay. Okay. Now it's time for me to reveal the answers. Yes. So first line is ITR, second line is taxation, third line is BIR, then the fourth line is money. Okay, then downward we have passive, train, withhold, and tin. Okay, how many of you got perfect or eight correct? Eight right answers. Anyway, we will be discussing it again here. Here are the answers. Taxation is again the process by which the government would levy the people, the businesses, the professionals in order to raise revenues for the government projects. ITR, or income tax return, is a BIR form which we use to pay taxes. Okay, BIR is the lead agency in the lead agency in collecting taxes for the government. Passive income is a form of income, or wherein a source of income which you do not have to actively work for it, but you are earning income from that activity. Withhold, withholding tax, it is a way by which the employers would deduct portion of the compensation from its employees for tax purpose remitted to the government. Money, when we pay taxes, we pay in the form of money to the government. TIN or taxpayers identification number. It is a unique number for every taxpayer used in all transactions with the BIR. Then the train law or the tax reform acceleration and inclusion law. This is the Republic Act 10963 signed into law by President Duterte, giving us the amendments, the provisions for the tax code today. Okay. Next we have, okay, the purpose of taxation. I have prepared a separate video for this, and I hope everybody watched it already. Did you? Yes. Okay. It's a separate video discussing the purposes of taxation. Okay, next we have, okay, progressive taxation. What is progressive taxation? When we say progressive taxation, it means um, it means uh, the tax rate increases depending on the tax base. Okay, so the tax rate increases depending on the tax base. This also means that the government would impose taxes on the people, on the businesses, or individuals or non-individuals, depending on their capacity to pay. If you earn more income, then you pay more taxes. If you earn less income, then you pay less taxes than those who have more income. Okay? So tax evasion. Tax evasion is a form of fraud. FRAUD. It's a fraud or a criminal offense against the government, wherein the taxpayer would evade or would not reflect his true income, his true earnings to the government, or he may also not declare his real income to avoid paying taxes. Okay, so tax evasion again is the taxpayer does not file the appropriate tax form and avoids paying tax paying his taxes using illegal means by not declaring, or he may declare but he declares less than the amount of taxable income. Okay, so this is punishable by law. Examples of these are freelancers, professionals who do not issue receipts for the payments they have received, and some businesses who do not issue um, official receipts. Okay, then we have here tax avoidance. Tax avoidance is not illegal. It happens when a taxpayer minimizes his exposure through legal means like careful tax planning, example of which are claiming tax deductions and tax credits. Okay? The penalty for violation of tax laws or tax evasion is a fine of 10,000 pesos and an imprisonment of not less than one year but not more than 10 years. Okay? Then we have now we discuss the main features of the train law. Again, why do we have to study the train law? The train law is a vital part in our tax code today. Okay, number one feature is high take home pay for minimum wage earners. So, this is a big help for the minimum wage earners to bring home a higher pay. Okay? Why? Because it is explained in number two. Why? Because in number two, it tells us that there is a tax exemption for people whose income is 250,000 and below. An annual income of 250,000 and below, that means you are immediately or automatically tax exempted, but you just need to file your income tax return. Okay, so that means minimum wage earners uh, tend to have more spending was this more money to spend for his family and more money to bring home to their families. Okay. Next, number three, tax is simpler, fairer, and more efficient. Simpler because the law says an outright tax exemption for 200. An example of this is an outright tax exemption for 250,000 in minimum wage earners and below. Okay. So simpler, fairer, and more efficient. Then we have a tax rate from 0 to 35%. So we will be showing you a table, a graduated tax table, showing the different tax rates or different tax levels and the corresponding tax rates. And it is from 0 to 35%. Number five, no personal and additional exemptions. In our old law, uh, married people and also head of the families have personal and additional exemptions. But today, in our law today, there are no more personal and additional exemptions, but outright tax exemption for 250,000 and below minimum wage earners. Next, we have the de minimis benefits. The de minimis benefits are the rice allowance, uniform allowance of the employees. Rice allowance is there is a limit of 2,000 per month, and and for uniform allowance is a 6,000 per annum. Okay, so number seven is the mandatory contributions. What are the mandatory contributions? The minimis benefit is a tax exempt already, okay? Same with the mandatory contributions. What are mandatory contributions? These are the contributions to the GSIS, if you're in the government service, SSS, if you're in the private service, uh, Pag-ibig, Health Fund, PhilHealth, these are all tax exempted, okay? Next, we have number 8, 13th month pay and other benefits. So 13th month pay, that is during December, and other benefits are tax exempted also. The it was increased, the 13th month pay and other benefits was increased from 82,000 to 90,000 limit. So there is now a limit up to 90,000 tax exemption for our 13th month pay and other benefits. The number 9, we have a passive income on PCSO and lotto winnings and prices of 10,000 or less is a tax exempt. Okay? So take note, passive income 10,000 and less is tax exempt. But passive income beyond 10,000 or 10,000 more, there is a final tax of 20%. Okay. However, gifts given during Christmas and major anniversary are tax exempted. Okay po. Then we have the number 11. Okay, of gross sales of 2 million, 3 million, I mean, gross sales 3 million and below for self-employed individuals and professionals. The taxpayer has two options. Okay, you have two options to choose as basis for payment of taxes. You may choose to pay your taxes based on the 8% tax rate on gross sales or gross receipts in excess of 250,000, or you may choose to select the graduated income tax table with a rate of 0 to 35%. Okay, so it is clear that gross sales 3 million and below, you have two options. You may select to choose the 8% basis on the gross sales or the gross receipts, or the tax table of 0 to 35%. Okay, next, number 12, we have self-employed individuals and professionals. Okay, self-employed individuals and professionals whose gross sales are 500,000 and below are exempt from the 3% percentage tax. Okay, so that's also a tax exemption from the percentage tax. Then we have the value added tax, VAT exempt for 3 million and below. For businesses with total annual sales of 3 million and below are tax exempt. Okay? Then there are others who are VAT exempt, as shown on the table here. We have raw food, agricultural products, health and education, senior citizens, PWDs or persons with disabilities, cooperatives, what else? Renewable energy, tourism enterprises, BPOs in special economic zones, socialized housing, 450,000 and below, low-cost housing amounting to 3 million, leases below 15,000 per month, condominium association dues are VAT exempt. Still others include, we still have VAT exemptions here, the sale of drugs for diabetes. So people who are suffering from diabetes and high cholesterol or hypertension, the medicines or drugs for these illnesses are VAT free starting 2019. Then the socialized housing and mass housing projects, 2 million and below, are VAT free also starting 2021. Zero rating of sales of goods and services to separate customs, territory, and tourism enterprise zones. Then increases the fringe benefits tax rate from 32% to 35%. What is a fringe benefit? Okay, we will be discussing that later, but I'll give you a certain an idea. A fringe benefit, this is a benefit given to the management of the company, to managers, like cars, housing, insurances, etc., travel plans, whatever, vacation plans. Yes, to encourage the management to work harder, I think. Yes. Then we have here the number 16 removes the preferential tax rate of 15% for employees of regional or area headquarters, offshore banking units, petroleum service contractors, inserts a provision that the optional standard deduction by general professional partnership may only be availed once, either by the GPP or the partners comprising such partnership. Though this will not this we will not be studying more on this because, as I have mentioned earlier, we will be focusing on the personal income tax or the individual. But for those businesses, corporations, general professional partnerships, this will be discussed in your college or college years in taxation. Then we have here all kinds of milk are tax exempt. Okay, so the government is encouraging people to drink milk by reducing the by reducing or by exempting it from tax. Okay, so all kinds of milk like the 3-in-1 coffee milk, the 100% juices and medically indicated juices are tax exempt. So, but you will notice in number 18, sugar sweetened beverages will be taxed. So, it is also a means by which the government is discouraging the people to drink juices which are sugar sweetened beverages. Okay? There is a 6 pesos per liter for drinks using sugar and artificial sweeteners, o see. And number 2, we have 12 pesos per liter for drinks using high fructose or corn syrup. So this is in respect to our health, we are encouraged to drink milk rather than those with with sugar. We know very well that sugar is what's this? One's very sugar is one cause of cancer. They say that when you drink a lot of coke, even in schools, that's why Coca-Cola or other juices or other sweetened juices are discouraged from our canteens today. There is a law telling us that we are not allowed to drink Coca-Cola or other sweetened juices in schools. And it is also indicated here in the law that they are giving them higher taxes than when you drink natural milk, don't know, the all kinds of milk or natural juices. Then we have the petroleum excise tax, okay, the cosmetic tax, 5% for those who will undergo medical procedures for purely aesthetic purpose. What do you mean by purely aesthetic purpose? When you want to, when you want to beautify yourselves or to make yourselves more attractive, then you undergo medical procedure, then there is a cosmetic tax of 5%. Okay. Then we have here a donor's tax of 6% and an estate tax of 6% also. Then, okay, let us try to answer this. I have entitled this the MECO exercise. There is a 1 to 13 question. Yes, 1 to 13 questions. I think yes. And then we need to answer them. Okay, try to answer them, my dear students. And the answers will be taken from the discussion we had today. Okay, so if you have reached this portion, I thank you so much for attending this taxation class. And again, I'm at your service, Teacher Jonna. God bless everyone.